Hey everyone, today I'm going to be talking about one of the accounting concept which is known as the petty cash. First, I would like to start off by explaining what exactly does petty cash means. Petty cash fund is the small amount of money kept on hand to pay for minor expenditures such as food, transportation expenses, and more. There are 3 steps to the process of petty cash. The first step to petty cash fund is to establish a fund. Second is by using that fund to make payments. And finally, replenishment of the fund that has been used up. Petty cash fund is established by setting up a certain amount of fund that is then given to the employee of the company known as the custodian. Let's take Sarah Limited Company as an example. The business cashes a check of $200 to establish the petty cash fund. The journal entry for the first step is by putting petty cash in the debit side and cash in the credit side. Moving on, the use of the fund given to make payments are the second step. The custodian in charge of the petty cash fund can choose to either make payment using the fund or pay using their own money and seek reimbursement after that. As the fund is slowly used up to make payments, what comes after that is the replenishment of the fund. The business counted the amount of money used using the proof of receipt collected by the custodian, and the business will restore the money back to the original amount given. Below is an example of the journal entry in the process of fund replenishment. The journal entry showed that the small expenses that has been paid by the custodian are put at the debit side of the account, and cash will be credited in order for the business to establish a fund once again back to the original amount. In the period of the reimbursement, problems might rise. Cash over and short will result in a clash between reimbursement amount and the receipts collected. In cash over and short, debit increases expense and credit decreases expense. Business credit cards also cannot avoid unauthorized payments that have been made, such as having no receipt to show or a wrong amount given, but it could held the employee responsible.